Thank you, Gary, and good evening, everybody. It's a privilege to be here and share a little bit of my background. I was asked to spend 10 minutes or so, sort of autobiographical, a little bit of my journey, and then we'll transition and I'll talk about what I do for a living, or part of what I do for a living, talk about the markets. I am actually in my 40th year in the investment management business. I can't believe it's absolutely flown by because it's been just a wonderful, wonderful time. I felt from years ago called into this business. What was not mentioned in the introduction or on the biography is I'm a child of God, as I hope everyone else in the room is. A sinner saved by grace and just thankful every day I wake up for God's goodness in my life, for his sacrifice on the cross. I hope you all have that same testimony. That's our primary calling. We have many secondary callings. I'll talk about mine professionally, a little bit personally, but that's what brings us all together. So I'm in the money management business. And over these almost 40 years, I've learned a lot about money. I can boil it down to three things. One, the easiest way to double your money is to take your currency and fold it over. That's the first thing I've learned. The second thing I've learned is money can't buy happiness, but everybody wants to find out for themselves. Have you noticed? And the third thing is, how do you make $1 million in the stock market? You start with 2 million. Most of you got that. That's great. So I had no idea, I'm speaking largely to the students who are trying to figure out life. When I was in undergraduate school, there even was a stock market. I had no idea. My parents didn't have a whole lot, and so we didn't know anything about investing. From undergraduate school, went to public accounting, worked for Price Waterhouse for a couple of years. And during that time frame, I dated a girl, and I didn't fall in love with her, but her father invested in the stock market, and I fell in love with the stock market. I found out what that was about. And the intersection of so many things. If you know in the investment business, you know there's some science and there's some art. There's some mathematics. There's a lot of psychology. There's a lot of politics. There are a lot of current events. I mean, it just brought so many things together, and no day is the same as the day before. What I also enjoy about this business is you see your results every day. You know exactly how you did on a particular day. And if you don't succeed, you try again. You know how that goes, right? Serving clients, interacting with people, helping them with their financial objectives, whether that's to help their kids have enough tuition money to get through school, trying to figure out what a retirement might look like, many, many purposes, and of course, organizations. My first portfolio management job was an eleemosynary position. Endowments and foundations, and the causes that I was able to aid by providing good returns was very, very gratifying. I've managed money all my career, and along with that came some promotions. I became Chief Equity Officer at the Oppenheimer Funds, then became Chief Investment Officer, so I was the second person under the CEO at the firm. At Merrill Lynch Investment Managers, I became the CEO of the business. So I not only managed money, that's kind of my trade, if you will, but I ran the business. I obviously delegated lots of things. I'll never forget one of my first responsibilities was to cut $700 million of expenses. And if you know the investment management business, you can imagine where's the most of the money go? People. So we had to fire a lot of people. As a quick aside, I had spent the first part of my professional life living with my wife and family in Princeton, New Jersey, and my work was in New York City. So I commuted. So I really had two lives, did I not? New York City, where I had one group of people, kind of my Monday through Friday crowd, and then Saturday and Sunday, the neighborhood, the church, and other activities. And the two hardly interacted. And so it took me a while for the light bulb to go off that God created us to have integrated lives. Because you see, I had two lives. I took a job not 5 minutes from home in the investment management business. And boy, did that change. The two worlds came together. And I began to see that that's the way God created us. One of the things I'll never forget that brought this home was, and I brought up firing those people for a reason. I had to fire the technology portfolio manager. We just economically couldn't make it work. This was after 9/11, et cetera, and the market values went down. And I'll never forget, the Saturday after I let this guy go, my son played his son's team in Little League softball. You know where I'm going. His son was the pitcher. My son came to the plate, and this boy, the pitcher, the son of the guy I fired, was instructed to throw the ball as hard as he could at my son. My worlds came together, do you see? And that integrated life and the integration that God puts in our minds, our hearts, and in our time became really, really key. Along the way, I became a little more vocal about my faith. My first decade and a half in the business world, I was pretty quiet about my faith. In fact, I thought there were no other Christians on Wall Street. I figure I'm the only one because I never met any. Well, once I put my hand up just a little bit and said I'm a Christian, guess what? They were all over the place. They just needed a little encouragement. Time went on, and as I continued to try to be God's man in the marketplace, as I became CEO of Merrill Lynch Investment Managers. When you're the CEO of a decent-sized business, you live in a fishbowl. They watched every move. When did I show up? When did I leave? What kind of car did I drive? Who did I meet with? When I walked down the hall, was I frowning or smiling? This gave me yet another aha moment and awakening to say, I'm representing Jesus Christ. And what attitude, what action, what's my face look like? When do I leave? Who do I have lunch with? Et cetera, et cetera, et cetera. You live in a fishbowl. That was a great education for me. I would pray along the way that God would give me a chance to share my faith with fill in the blank, Joey, Sally, Susie. And you know, the opportunity really never happened because I was trying to make it this some special sort of thing. God, give me a divine appointment with Joey. And I finally woke up one day and I said, no, it's to be part of my life. So I purposed to do two really small things. The first was when you work at the same place all the time, Monday shows up and people say, hey, what'd you do this weekend, right? How common is that? And I would always answer the question with what I did that was different from normal that weekend. I purposed to say, assuming I did, which I did just about every Sunday, and I went to church. One guy asked me 2 Mondays in a row, what'd you do this weekend? And I went to church, came up twice. He said, wait a minute, you went to church last week. Do you go to church every week? That was Joey. My chance now to have a teachable moment with Joey, tell him, why is church important to me? Who is Jesus? So that first very small action. The second, as the head of a business, people come to you all the time with their problems. Often they're work problems, sometimes they're personal problems. And I would say as the person left my office, I'll be praying for you. Or may I pray for you? And no one ever said no, no matter what their faith background was or wasn't. And then if they dared to come to me a second time with a problem, can I pray for you now? Again, no one ever said no. So here's the fictitious Joey or Sally that I just talked about in my office with a problem, and now I'm going to talk to my God right in front of that person, the person I was praying for a long time to be able to introduce themselves to. Do you see I'm saying these are little things. It's my encouragement, whether you're, 18 or 68. What are the things that you do that are part of the warp and woof of your life to make a difference? I could go on and on. I'm watching the clock. I'm almost at the 10-minute mark on this piece, and that was the agreed upon part. I have the privilege, along with my wife, of sitting on a couple of boards. I sit on 11 boards. They're all but one faith-based. And to be able to give of yourself, whether that's time or hopefully some good ideas, or write a check from time to time to these organizations, is a thrill and a privilege. I shared with the group at dinner, I'm going to repeat it, what God has impressed upon me in terms of how our Sunday and Monday are related, integrally related, and how we are one person, not two different people, is some observations. The first is Jesus himself. Where did Jesus spend most of his time? Answer: in the marketplace, on the streets of life, right? Yeah, occasionally you'd find him off in the corner, in the synagogue, in the desert, praying. But most of what he did, most of what's recorded in the Gospels, his teachings, his ministry, if I can put it broadly, the miracles he did, it happened kind of right in the streets, if you will, right in the highways and byways of life. So he's a great example to all of us who are working in the marketplace of why our job is so key and why our job is a holy calling. Secondly is a quote that will never leave me from Billy Graham, who said that the marketplace will be to the gospel what the medical profession was to the gospel last century. And if you know your church history, you know doctors and nurses and other medical professionals who took their skill set and went to the far-flung places of the earth to share about Jesus, what impact they had on the spread of the gospel. Those of us who work in the 9 to 5 window, if we think about that, the responsibility that we have, the privilege we have, is absolutely incredible to be God's ambassadors here at this time. The third thing, and I already mentioned this out of this short list of 5 that's impressed me in my life about how faith and work come together, is the fact that our jobs are holy callings. It is not a second-class citizen who cleans the floors. It is not a second-class citizen who manages money. It's not a second-class citizen who teaches second grade. I thought for a long time, erroneously, if I'm not called to be a pastor or ministry, I'm a flunky in God's economy. Not true. So whatever it is you are doing or studying to do, think about what you're headed for as a holy calling. The intersection, can I put it this way, of how God has gifted you, both in abilities, your interest set, and to use Frederick Buechner, where those things and the world's needs meet, that's your special place, your holy calling. The fourth thing is observation about God, our Creator. We read in the first book of the Bible, we are made in God's image. And if we are made in God's image, we have some reflection about who He is. And last I checked, He's a worker. He was a worker in creation. He is a worker in sustaining everything. And of course, He's a worker in our lives for salvation and the sanctification process. So if He's a worker, aren't we to be workers? And maybe, point 5, if we observe the quality of God's work, how would you grade God's work? C? Oh, I don't think so. A+++, right? Just look out the window. If we're made in God's image and He's excellent at work, are we not to be excellent also? I meet too many people who think work's a necessary evil, or it's a means to an end, or even at a slightly higher level, I make some money so I can put some money in the collection plate at church or support a missionary somewhere. Good things, but work is way more than that. Work is worship. We spend more time at work, the average American, than any other activity. Do you think God doesn't care about where we spend most of our time? He cares intimately And therefore, our work is a holy calling, and we're to be excellent at it. I often use the line, if we are a B minus or a C plus at our work, the rest of the world is not going to care so much about the rest of our lives. But if we're excellent at what it is that we do, they may want to know what makes us tick. I could go on, but I feel like, Gary, that I've delivered the sermon on a little bit of, So let me shift gears, but let me do it this way. I've tried to touch on some things that I would argue are eternal in perspective. I'm going to now talk about some things that are more temporal in perspective. That does not make them less important. Whatever it is you do for a living, what I do for a living, back to what I just said, we're to be excellent at it, and God has made us stewards of who we are. I could do another, 20 minutes on the whole generosity thing. I believe, I hope you do too, that God gave us everything. And if God gave us everything, the question never is, and let me speak to money, is never how much should I give? It's how much should I keep? Anybody has a little bit of money in this room, if that doesn't transform your thinking about generosity, I don't think anything will. For most Americans of means, a tithe is embarrassing. That was the Old Testament standard. Did you know the average America's a fairly generous society, the average American gives 2.1% of their income. Do you know what percentage the average American Christian gives? 2.4. That delta is not statistically significant. Shame on us. There's a higher calling. We need to be separated, sanctified, different from the rest of the world. So that extra part, that one was for free. So we're going to move from the eternal, if you will, to the temporal. I spend my days managing money. And one of the things, as a side note, is I talk about markets. I talk about economies. And the beginning of every year, I have the privilege, now for 30 years, of coming up with 10 predictions for the calendar year to come about the economy and markets and things that affect markets. So my proposal is to take you through that as, kind of one guy's work effort. And I hope there's some kernels in here that help you think about the world as we see it. So 10 predictions for 2020. Let me start with a couple of observations about the year that has just ended. These are returns to various asset classes. And as you probably know, it was a good year for almost any kind of investor. I say the pace of the race was really fast. And the S&P 500, which represents U.S. stocks, led the pace, fastest runner on the track, up 31.5%. There aren't too many years for you, the uninitiated, on markets that we get that kind of return. The long-term return on stocks in the United States is barely 10% per annum. So 31 is a really strong number. And yet my bearish friends remind me of two things. One, most of that return was taking back what we lost in the fourth quarter of last year. The fourth quarter of 2018, stocks were down nearly 20%. My other bearish friends remind me that of that 31.5%, only 8% of it came from earnings. The other 92% came from increased valuations. Again, for the less initiated, there are a lot of ways to measure the value of the stock market. The most common is the PE ratio, price earnings. It went from 14 to 19 in basically the space of a year. That's a big move. We do these predictions every year. We have a grader. They gave us 8 out of 10. I'm not going to tell you what we got right and wrong in the interest of time because this is now ancient history. So where are we and where might we be going? The question in the middle, again, I'm a stock investor, so that's my frame of reference. Are stocks discounting the good news? Is the stock market saying things are going to be good? I come back to the valuation level. Stocks are selling at nearly 20 times earnings, PE ratio, price divided by earnings. That's the highest we've seen while we've been alive in this room, with one exception, and that is the height of the tech bubble, which occurred in the year 2000. So relative to history, stocks are not cheap. So they must be expecting some good news. Or let me say it this way, the good news better come through or the stock market's going to have an issue. Related questions: are earnings expectations too high? Is the trade deal with China big enough? How long can we avoid a recession? What will this election mean? Underneath the surface, the U.S. economy in particular is doing very well. In particular, the U.S. consumer, which is two-thirds, approximately 70% of the U.S. economy, is doing very well. How are U.S. consumers doing so well, or why? One, the number of us who are working. Two, the number of new jobs that get added every month. First Friday every month we get the report. The one came out recently is 140,000 new jobs. Multiply that by 12, that's like 1.5 million new jobs. That's a lot. Three, wage growth has picked up. It's running year over year about 3%. So workers are making a little bit more money. And number four, the U.S. consumer has an enviable savings rate of 8%. For reference, there are many times when the U.S. consumer has a savings rate close to zero or at times negative, spending more money than they earn. That's a very healthy combination. The U.S. consumer, said differently, has carried the world on its back for some time. The rest of the economy, the manufacturing economy here in the U.S., and the global economy is a little weaker, flirting with a recession back in the fall. We think we see some signs of improvement in both of those. So I have an equity balancing act commenting here. My conclusion is stocks aren't going to do a whole lot this year. That is to say, I think there'll be some up days and there'll be some down days. I don't see a big decline because the only big sustained declines in the stock market have come when we have an economic problem called a recession. And the probability of recession, I think, is close to zero this calendar year. Alternatively, because stocks are so expensive and earnings expectations, as I'll suggest in a minute, are on the high side, I think it's going to be difficult to have significant upside. So we're going to have this flapping in the breeze, if you will. 7 positives. Economy and earnings are doing fine. That's what powers markets in the long run. There are no signs of recession, as I hinted at. The global and manufacturing economy improving. Improving trade outlook. So as you probably know, the U.S. and China have been at it for some time. Phase 1 is going to be signed. Phase 1 does not solve our problems. It's about this big relative to the set of problems that exist with China. But what it does is take that issue off the front burner, and that's a good thing. Global monetary easing. Central banks, starting with the U.S. Fed, have provided a massive amounts of liquidity to the system, and a lot of it's found its way into the investment markets. That's a good thing at one level, and we have to thank those central banks for providing that liquidity. That's what's taken this PE ratio that I referred to from 14 to 19 in the space of a year. And finally, FOMO and TINA. FOMO is fear of missing out. TINA is there is no alternative. I have people, they have not been this direct with me, but have sort of hinted the following. I'm buying stock XYZ today because it's going up tomorrow. That's not healthy, right? If I'm buying XYZ because its prospects for growth or whatever are good, that's a little more understandable. But this, I better get in before everybody else does, is a little bit nerve-wracking. Sadly, I've got a list of negatives that's equal. Peak profit margins occurred in the U.S. in 2018. Valuations are not cheap, as we hinted at earlier. We have leverage on the corporate side that is picking up. Despite the fact that we're signing a trade deal, there are all kinds of trade concerns. If you've watched elections in the last several years, a lot of populists have been elected in various countries. Populists tend to be nationalistic, and therefore their interest in global trade is much less. Limited central bank ammunition. If the world has a problem, the central banks don't have a lot of ammo because rates are close to zero. And then this election uncertainty, which I'll come back to, and significant geopolitical uncertainty. There's a long list there. Iran was one of them, and of course that struck a bit in the last couple of weeks. So that's the intro. Part of me could say, and I'm watching the clock, are there any questions? Let me take them through. I'm going to skip a lot of slides, but give you the gist of these 10, and then a concluding comment or two. The first of which is the world avoids a recession this year. U.S. GDP, gross domestic product, that's the broadest measure of an economy, grows over 2% and global GDP over 3%. If you know economics, you know they're good numbers. Not great, not record-setting, but good enough. One of my friends who's an economist used the phrase, this business cycle is, quote, chronologically old but economically middle-aged. This is the longest economic cycle the United States has ever experienced. It became the longest last July 1st. So we're, in some people's minds, on borrowed time. If it's old, it must be, like you and me, when we get old, ready to die. Not true. Business cycles, bull markets do not die of old age. They die when they get murdered. And the murderer is typically the central bank, the Fed, who comes along when there's an inflation problem and say, our job is get inflation out of the system. They get their knives and they whack at everything. They usually get inflation. The problem is they get everything else and put us into a recession. Prediction number 2, inflation and 10-year Treasuries. 10-year Treasuries, again, for those of you who don't know the markets, is kind of the bellwether Treasury. Both of those items, inflation and 10-year yields, have hovered in the high ones for some time, between 1.5 and 2. Our prediction is we're going to wake up at the end of the year, and for the first time in quite a long time, we're going to be in the low 2s with both of those numbers. Now, 2%, 2.5% inflation and interest rates, still very, very low relative to history, but it's up a tick or two from where we are, which I think will get some people's attention. Wish I had time to develop it all, but let's keep moving. Number 3, earnings fall short of expectations, partially due to rising wage rates. Putting my portfolio manager hat on, my team and I, we talked to lots and lots of CEOs. Companies were owned, companies were thinking about owning. Their common complaint, I can't find workers. A year ago was I can't find skilled workers. Now it's more I just can't find workers. The unemployment rate in the United States, as you probably know, is at a 50-year low. So no wonder these shortages are picking up, which means if I need a worker and can't find him or her, I got to go to the company down the street, pluck them out, and pay up to get them. That is negative for corporate profit margins. Number 4, this is our riskiest prediction and the one I hope I get wrong. It is that stocks, bonds, and cash all return less than 5%. If they do, it'd be only the 4th time in 25 years. Cash returns, depending what cash vehicle you're looking at, about 2%. That's not going to get to 5 this year. That one's shooting fish in a barrel. Bonds. I've just argued interest rates are going to move up a little bit. If interest rates are going to move up a little bit, bonds are going to move down a little bit because they're sensitive to interest rates. Or said differently, it'll be a coupon minus year, which means most bonds won't see 5% if that's accurate. Finally, stocks. I've already argued that earnings are going to fall a little short of expectations, and they're not particularly cheap. Number 5, non-U.S. stocks beat U.S. stocks. What you see on this slide is how much U.S. stocks have beaten non-U.S. stocks year by year, a couple of years when non-U.S. won. I've argued for years, if you could have 100% of your investments in the U.S., i.e. nothing outside the U.S., that's a good thing to do because the U.S. has massive advantages. Our view is that's running out of steam a little bit, and cyclically non-U.S. will do a bit better. The reasons are on the right-hand half of this slide. They start with a belief that global economics are improving and the dollar is going to have some weakness. If those two things happen, non-U.S. stocks are likely to do better. Prediction number 6, I won't dwell on it. For many, it's a more academic sort of notion. It is that value and cyclical stocks outperform growth and defensive stocks. A cyclical stock, of course, is one that benefits when the economy does well, gets hurt when the economy doesn't. A defensive stock does okay all the time, or the company's business does. We always have a prediction on sectors. There are 11 sectors as defined by the rating agencies, and we always have these 3 are going to beat those 3. We've been privileged to get this one right 6 years in a row. I hope I'm not jinxing myself, but our view is a basket of financial, technology, and healthcare stocks outperform a basket of utilities, real estate, and consumer discretionary. Again, I wish I had time to go into details. They're on this slide, and we can provide these slides if anybody's interested in going into more details. Number 8. Active managers outperform their indexes for the first time in a decade. Those that know the investment business know that there is a war going on between mimicking the index, an index fund, and active managers that pick stocks. And in the last decade, the index funds have won. Indexation, or indexes beating active managers, is a cyclical, not a secular phenomenon. But because the indexes have beaten active managers for quite some time now, people think it's an inevitable forever trend. Not true. There are factors that cause tailwinds for stock pickers and factors that cause headwinds. Here's the list. When this list goes a certain way, I'll give you the list, active has a tailwind and tends to outperform. Small stocks beat big stocks, non-US stocks beat US stocks. Overall returns are low, value beats growth, equity market correlations are low, acceptable economic growth, and modestly rising interest rates. That litany has not been in existence more than a couple of these for each of the years this past decade. We believe most of this will be in place in 2020, hence this crazy prediction. Number 9. This one gets a little more philosophical and can border on a religiosity if I'm not careful, but in this group I'll go there. We have a Cold War with China, and I believe we're in a Cold War inside our country. The one with China is perhaps obvious. It's been manifested in the last 12 months or more with this trade nonsense. In fact, the swings in the stock market last year were largely based on how the trade talk's going. We have had issues with China. China's had issues with us for decades. You do not solve something that's accumulated over decades in a few months. Phase 1 trade deal is just the tip of the iceberg. If we're going to be successful here with figuring out China and China with us, this is phase 1 of many, many phases. Think about your favorite sport. Who's the number 1 and number 2 team? When they play each other, is there an extra charge in the field? Of course there is. Think of it the same way. The US and China are number 1 and number 2. They both want to be number 1, and so the skirmishes, some friendly, some not so friendly, will continue. Let's hope this stays a Cold War. A hot war would be a disaster for both countries. Perhaps more interestingly is the Cold War that's going on inside our country. It has many elements, the first of which is political. You can see here work done by Pew Research that attempted to measure the Democrat mean or average vote and Republican in 2004, again in 2014. What's the point? The point is the difference between the two parties was small and now is big. You can also see, looking at these charts, the 2014 one, the political center is disappearing. Gerrymandering is the call. There are far too many seats in the House of Representatives. They're safe seats. If you're a moderate Democrat and you run in a primary, the Democratic Party generally puts up someone to the left of you and beats you. On the Republican side, if you're a moderate Republican, the Republican Party puts someone to the right of you up and defeats you, and you get this polarization. It's only gotten worse. This is not just a political issue. There are all kinds of other pieces. I don't know about the 18 to 29 years olds in this room, but across America, there are more 18 to 29-year-olds that think socialism is a better system than capitalism, not the other way around. It's never happened before. The gap in income and wealth has been troublesomely increasing. Point number 3, in 1980, the average CEO's compensation was 32 times the average worker in that company. Today, that delta is 278 times. I'm not going to play God and tell you what the right number is. I don't know. But my guess is the move from 32 to 278 has been a little stark. Most troublesome are number points 4 and 5. Life expectancy in the United States has declined 3 years in a row. That has never happened before. Causes: suicide, alcoholism, and drug overdose. Suicide rates have increased in every age cohort, most especially 18 to 29, up 56% in the last 10 years. Now, I usually have to stop there and move on to the next prediction, but let me add a couple of sentences in a room like this. What's the source of this? I think it's sticking with social science without even bringing Jesus into the equation. It's the breakdown of the family. A lot of this can be traced to fatherlessness. The higher the rate of fatherlessness in a home, in a community, the more these problems show up. We need to return to some things this country perhaps was founded on. More importantly, we need to return to the biblical roots that many of us espouse. Number 10 is always a political prediction. This is an election year, so we had to go there. We think this will be one of the biggest roller coaster rides in U.S. political history. But when the dust settles, it will be a status quo election, meaning the Democrats retain the House of Representatives, the Republicans retain the Senate, and President Trump is reelected. There are lots of variables and a lot of time between here and there, but let me speak just to the presidency. There are two variables that are most important in predicting whether a first-term president is going to win a second term. The first is he challenged significantly within his own party? If the answer to that question is no, which it is in this case, it's a tailwind for the incumbent. The second issue is there a recession? If there's a recession, that's a headwind. If it's no recession, there's a tailwind. President Trump is not being challenged significantly within his own party, and there is no recession. We don't think there will be one anytime before November. Therefore, the probabilities go up, gets reelected. Issues that matter most, some years, to young people who haven't been voting for all that long, the difference between the Republican and Democratic platform is not very significant. This time it's a big difference, and therefore the markets are watching around issue of taxes, trade policy, monopoly power for technology companies, government spending, and the like. Lurking in the background is the fact that federal debt as a percentage of GDP keeps going up at an accelerating pace. The only time it's been higher is World War II. This does not matter at the moment because interest rates are low and economic growth is acceptable. So nobody's talking about it. There will be a day of reckoning. Conclusions to these 10 predictions. I'm going to go through these quickly. If there are issues, we can bring up in the questions. Expect choppy and frustrating markets. 2, focus more on alpha, less on beta, back to where I started. 3, own a little more high quality value and a little less expensive growth. 4, diversification. So let me pause there. Diversification means broaden your investments across different things, asset classes, geography. The theory behind diversification is it's supposed to potentially increase your returns and definitely lower your volatility. It has failed miserably in the last 5 years. The last 5 years, if you took all your money and put it in large cap U.S. growth stocks, you obviously had phenomenal returns. What most people miss is you also had lower volatility. Attempts at diversification certainly lowered returns, but also increased your volatility. Number 5, we have not repealed recessions, and while we don't see one anytime soon, we want to increase the quality and free cash flow of our portfolio in advance of that. 6, watch wage rate increases. They are the precursors to inflation, and remember, inflation is the murder weapon of the Fed. Finally, number 7, absolute return strategies, market neutral strategies make sense in an environment where overall returns are pretty mediocre. Maybe I leave this slide up as you and I face a Q&A, these are the things we think you should expect over the next 10 years. So look, I know some of you say, what's he talking about? That aren't in the markets. I get that. I apologize. For others of you, I wish he had gone deeper on this, that, and the other thing. I tried to aim for the middle. I hope it's been helpful in some way, shape, or form. So we're going to have a chat now, and feel free to bring anything up on that piece or the piece we talked about earlier, the, quote, eternal piece.
All right, so we knew that we'd have a real integration of business and faith here, and you have given us that.
That was the goal.
Wonderfully. That was the goal, and he hit the mark. That's awesome. Let's go back a little ways, and then I'll ask a couple of questions, and then the students think through some questions that they would have for you. So we talk here about business as ministry. We also talk about calling, career, giftedness, serving from our sweet spot of our giftedness. So when did you start to discover how God had designed you? That we have a few students here that chose accounting and economics, and so yeah, how many accounting folks do we have? Okay, yeah.
Oh, quite a few. Wow.
Yeah. So when did you start to discover that wiring, and how did God lead you into this giftedness?
I was always a numbers guy. When I went to undergraduate school, I thought I wanted to major in mathematics. And by sophomore year, the only numbers in the textbook were the page numbers. Everything else was Greek symbols. And I said, this is not math. What I wanted was, of course, applied math, management science, operations research, quantitative management. And I began to discover all those things and loved those things and did reasonably well at it. So it was a process. It certainly wasn't an event. And I come back to finding the stock market, and a lot of light bulbs went off. I was not mature enough in my faith or educated enough to realize this is God showing my sweet spot. Mm-hmm. He was, and I discovered that after the fact. But, I come back to the Buchner thing I quoted earlier. If you can, let me say it a different way. I often get people say, how do I know what I'm supposed to do? Well, what are the things you like to do? What are the things you're good at? What are the things other people say you're good at? Spend time reading the Bible. God will, every once in a while, just zing you with something. I remember using as an illustration, if I thought my sweet spot was try to get into the NBA and play basketball, some friend of mine would have come to me and say, Bob, how tall are you? There's not a chance. So it's got to be that intersection of things that God reveals to us over time.
So did you find the Lord in your home? Was Jesus talked about in your home? Is that where you were connected to the church, or did it come later in life?
I can't remember a day I wouldn't have called Jesus my Savior and my Lord. So was it a young boy? I grew up in a Christian home, which of course does not make one a Christian, but there's a tailwind that might help that process along. And I can remember many times, as I'm sure you folks can, of points of commitment, points of recommitment along the way, but at a very young age.
For students that are here, they've come into the MBA, the Master of Management, either in person or online, or they're here at Biola as an undergrad, or they're an alum and they've graduated. I graduated in 1977, not a great economy to graduate into, job economy, right? But part of what you're saying is this is a great time that companies, organizations are looking for talent, and salaries and offers should be good. It's a great time to add to your skill set. It's also a great time to get connected to your faith, because the temptation will be stronger in a great economy in some ways. How do you make that connection?
Yeah, so several
for
thoughts.
Students that are here.
Several thoughts pop into my head. It is true, even when in a typical home, you leave the home and go to college, all of a sudden now your world is like this. And as One friend of mine that I saw today, he's got a kid in college, I hadn't seen him for a while, said, I think my son's making good choices. It's the point in time when freedom opens up and we have to say, what do I really stand for? Who is my God? What am I going to live for? I say, to looking at a lot of young students, particularly over this side of the room, I'm an old guy. You admitted you were an old guy.
Yeah. I gave a year.
I was one before you, but we won't tell anybody. We are on this planet for this long, and we are in eternity for this long. I wish when I was your age, I kind of knew that. And I don't know, would I made different choices? Probably. I would have different priorities, I guess. So if we have that appropriation, it doesn't mean we don't spend time in the world and get good at the world stuff. We just don't become of the world in that sense. Back to my Romans 12:2. I forgot if I used it in this room. Either you're being conformed to the image of this world, or you're being transformed by the renewal of your mind. It's one or the other. And if you don't choose to be renewed in your mind, which helps you inform the choices that you make, the attitudes you have, the behaviors you have, the world will conform you. Don't make no mistake about it. This is conscious, this is unconscious. I don't know if that's helpful, but that's what pops into my head.
Right. Questions that our students have, that others have? Yes.
So I manage some long, short funds. We've been short Boeing for some time. Boeing is a great company, and I still think has a wonderful future at some point. But they're going through a really tough period. As you know, they made a CEO change recently, and this is the beginning of the change. I don't want to say bad things about the old CEO, but the practice was, let's hide our problems and not be real forthcoming. This new guy is saying, we're gonna have open kimono. Help us fix this thing. So they're recognizing their issues and they're moving on. Long term, I mean, they're two makers of this, of Boeing and Airbus. And Boeing's the number one player, and I don't think that's going away. But they're having a tough time at the moment, getting through the MAX, et cetera, et cetera. But they'll get through it, I'm convinced. The company is a cash flow machine. Has been, a little bit of pause, I believe will be again. And we'll hopefully at the right time cover our short and go long again.
Other questions? Yeah, in the back.
So Tesla is a great example of what's going on in the marketplace today. Tesla makes no money, has negative cash flow, and is, last I saw, was up 30-some points, 40 points today. On a base, so it was up about, what did somebody say? Was it more than that? Yeah, up about 10% today. In my view, Tesla's a very expensive stock. Thankfully, having been short it and covering our short a while ago, we are not short currently. But if you put a gun to my head, Bob, you have to be long the stock or short the stock, I'm going to go short the stock. Look, there's a possibility that there are breakthroughs here. I just think they're farther down the line and a little more mediocre than the very promotional CEO is telling us. Not that he's being deceptive necessarily. He loves his company. He thinks it's the best thing since sliced bread. So he's quite the promoter.
Questions? Yes.
Yeah, I can think a lot of things here. The first thing that pops into my head is, and I'll make this personal, my friends. My friends are generally pastors, college presidents, and other people like that. Example, one of the boards I'm on, the development guy who didn't know me went to the college president and said, we need to get Bob's friends in a room and ask them for money. And the president said, just laughed, he said, he knows people like me, poor people like me. So it's not that I've excluded my business people from friendships, but my closest friendships, my bosom buddies, if you will, they're people of faith. I have some, sadly none of them in my geography, that are Christians and work at the same company I do. Boy, we have a bond. It's just not a regular bond. So that's part of what's kept me there, and recognizing, the time we're here, spending time every day in the Word. I mean, it can become, and I'm guilty of this because I'm a type A, check the box male. I did my devotions today, you know. And God doesn't care about that. He wants a relationship. So finding ways to develop that and the one-on-one time with God. I'm struggling at 65 years old trying to figure out how do I do a better job listening to God. I talk to him all the time. I tell him what I think. I need to listen a little bit more about what he's saying. I don't mean just read his word. I do that. But pause. Okay, now what is he saying? What is he saying generally? What he's saying to me? So develop that habit long before you turn my age.
I've been using the Abide app lately.
It's a great app.
And you could do that for 15 minutes and they talk fast.
Yes, right.
You could hit 30
right.
or 45 minutes and there's long pauses. Okay, Lord, what are you saying? What are you saying? And
that's a good app if you don't know this app.
Tell us about your choir and how their role in your life. We could talk my band and worship leading and writing songs and that,
right.
Not reading music,
yeah.
But your choir. You tell us about your choir and how they ground you.
So the second Sunday in December, we had our annual Christmas worship concert, and I came out on stage totally in black with my baton, and I directed 30 voices and 20 instruments in part one of Handel's Messiah. Oh, it was a thrill. I had the best seat in the house. Yeah. And these choir folks, they work hard. They're all volunteers. They love Jesus, and I love them because how they come together. You know, we as a choir, you meet as much as any small group. So we're a small group inside our church. We pray for each other. We send emails to each other during the week when somebody's not there and we know they're sick, you know, stuff. So it's just a great, use the word grounding. It grounds me. You know, my choir, Bob, where are you going this week? Well, I say I'm leaving choir rehearsal Sunday evening. I'm heading to LA as soon as this choir rehearsal's over. LA Monday, LA Tuesday, San Francisco Wednesday. I'll be home on the red eye Thursday morning, and Thursday night I'm taking a red eye to Paris. So, you know, and they look, and you're going to be here next Sunday? How do you do that? So they ground me, to use their words, and I need that.
Yes.
I think the manufacturing recovery is going to be slow. It's going to be bumpy. It's going to be irregular. A couple of things. This is the longest business cycle in history, but it's also the slowest. Part of the reason the U.S. consumer has a savings rate of 8%, the parallel on the corporate side, is companies are not spending as much as they usually do on capital expenditures to grow, to improve their business. A lot of the reason, I think, is the tentativeness that came from the severity of the last recession. And therefore, I don't want to get over my skis, so individuals and corporations are tentative. Individuals do so many other things in spending money. Corporations, if they're not reinvesting in their business, they're going to be slow, and manufacturing in particular. The trade issue, I know, scared a lot of CEOs, manufacturing ones in particular. They just didn't know what tomorrow was going to bring. So they, you know, if the board authorized them to spend $100 million on CapEx, they have only spent 70 because they're just not sure. So all of this has an overhang that's kept things slow. I think it's getting a little better, but it's spotty. You know, I glossed over, I think it was in the pack, German manufacturing is one of the weakest things on the planet. But if you look at it, it's begun to recover from very low levels. So I don't think it's going to be a boom for manufacturing. I just hope it's a little better because the stock market at 20 times is expecting it to be better.
Yes. Okay, yeah, go ahead.
So what's your...
Yeah, so risk has two sides to it. Most people, when they hear the word risk, they think, but risk has two sides to it. So when I make an investment, I want to know what the risk is. What's the risk this way and what's the risk that way? And I think investors should do the same thing. One of the riskiest portfolios, if you're your age, you're young, and you're saving for your retirement and you have it all under your mattress, you have a very risky portfolio. If you have it at a bank and you're getting 2% return, you have an incredibly risky portfolio. You're almost guaranteeing you're not going to meet your long-term objectives, whatever they are financially. So you should be, to use the phrase, taking on more risk, meaning have more volatile investments that have a higher projected rate of return. Conversely, if your time horizon is like from here to Easter, you shouldn't have any money in the stock market. It should all be at your bank because you need that money soon, and it's a random. So there's some of the concepts I always try to talk about in risk. Stocks are very risky because they have a high volatility, a high standard deviation of return, to use the technical term. Bonds have a lower standard deviation of return, cash even lower than that. But there is no free lunch. The higher the standard deviation, the higher the risk, generally the higher return over the long term. Risk-reward trade-off. Hope that's helpful. Sure, I'm going to make it personal. I pick stocks. If I don't sharpen my pencil and get better every day at what I do, they're going to find a robot that does it better than me, and I'll be gone. Same thing for most people in this room. Whatever you do, you've got to continue to improve yourself. Go back to school, literally and figuratively. Study up, because robots are more reliable and cheaper than most of us. So that is a phenomenon. Thankfully, the globe is growing in such a way that we've already seen a lot of that, but people have retooled and found other things to do. That's why we have a 50-year low unemployment rate.
All right, let's thank Bob for a great evening.
Discover who you're called to be at Biola University, a leading Christ-centered university in Los Angeles, with programs on campus and online. Subscribe for more of our videos and learn more at biola.edu.